So, as I said, welcome everybody. We'll now get started. So this is this is part of a series of outreach events for the International Financial Reporting for Non-Profit Organisations consultation paper. Today's webinar is about non-exchange revenue and inventory held for distribution. These are issues papers 3 and 6 in part 2 of the consultation paper. And the objective of today's seminar is to familiarise you with the content of these papers and hopefully give you confidence to respond to the consultation paper. So move us on to our next slide. Just apologies. The agenda for today will look at what we understand to be the issues facing NPOs and the financial reporting that gives rise to. We'll also look at the different approaches outlined in the consultation for how we could take forward these issues. We'll finish each part on consultation questions and how you might be able to respond to those consultations. We have some polls to get your input throughout the webinar. We'll also discuss the results of the polls as well as give you the opportunities to ask any questions at various points during the webinar. But please feel free to add your questions at any time through the chat. Any questions or comments, please use that facility. We expect the webinar to run about 2.5 hours, maybe slightly more, but that will be dependent on the number of questions that you have. We will definitely not be running beyond 3 hours, and if we haven't answered all of your questions in that time, we will follow up after today's session. So we are proposing 10 topics for inclusion in the first set of guidance. These 10 topics cover matters relating to the reporting entity, to revenue, to expenses, aspects of the balance sheet, and matters relating to the presentation, content and scope of financial statements. We won't be able to cover all NPO specific issues in the first set of guidance, so it's important that we include the ones that have the highest priority for the sector. The overview to part 2 looks at all of the issues that have been identified to date and also looks at how we prioritise these. And in the overview, we're seeking feedback on the entire list of issues and their prioritisation to make sure that we're focusing on the right things. In examining each issue, we are focused on the project guidance objectives that underpin the quality, credibility, transparency and comparability of financial statements. The objectives are also focused on meeting the needs of users of financial statements, but in so doing, balancing these against the needs of preparers. So today, as I said, we'll be looking at non-exchange revenue, which is issue paper 3 in the consultation paper, and inventory held for use or distribution, which is issue paper 6 in the consultation paper. Knowing when and how to recognise revenue such as grants, donations, gifts in kind and service in kind has been a consistent issue raised in our outreach discussions. And we are calling revenue from these sources non-exchange revenue. And we're calling it this because in these transactions, the individual or organisation providing cash or resources does not receive something of approximately equal financial value directly in exchange for the resources provided. The cash and resources are provided for the benefit of other individuals or organisations, not the contributor themselves. So they haven't had an exchange, and that's why we're calling it non-exchange. In thinking about this topic, organisations need to know when to record revenue, how to measure it, and what information they should provide. I should say we won't be covering revenue from commercial type arrangements, such as providing services to third parties for a fee or selling goods. And whilst there may be some issues associated with these types of transactions, they haven't been identified as NPO specific issues. As we identified earlier, inventory can be donated rather than just purchased. That could be the resource that's provided by a contributor. And this inventory can be held for use by the NPO themselves or for onward distribution to service users. The questions we hear are similar to those raised in thinking about revenue, about what to recognise, but also extends to how inventory is impaired. So those are an introductions to the topic, but I wanted to speak a bit more specifically now about the issues. And rather than hearing me speak throughout, to introduce this topic, I'll be sharing with you some short videos that reflect the experiences of members of the non-profit community around the world. These videos will provide perspectives on today's topics and describe day-to-day experiences. And so to kick us off, I spoke to Sam Museke, my colleague, recently about what she has been hearing and the feedback that Sam has been receiving from stakeholders. So here's the short video. So Sam, you've been involved in country awareness meetings and lots of other outreach meetings during this consultation paper. And I know that you've had in-depth discussions with members of our advisory and reference groups. It would be really good to hear some examples that you've heard of from around the world that bring this topic to life and embed it in reality, that sort of move away from the theoretical questions to the practical and the situations that people actually experience. I'd be really interested to hear some examples of the contributions that you've heard. And perhaps we could start with cash contributions like grants and donations.
Sure. So, well, obviously, in addition to general donations, there's so many different kinds of grants with different kinds of restrictions and conditions. And I think that's a particularly interesting area. I can give an example of a grant funded by a bilateral donor to fund vocational training institutes in post-war northern Uganda. And there was a restriction within each major budget line. We had flexibility, but then between the major budget lines, there was only a 10% flexibility. And then remember, if we wanted to do anything different on equipment, that needed prior approval, and overheads, we also had no flexibility. It was just a percentage of direct costs. So there was that degree. And I think, you know, with restrictions, we can have almost anything from, you know, spend this on anything as long as it's in the Philippines, right down to, you know, line by line requirements. I think there can be quite a range of restrictions that we see in practice. I heard of another really interesting example in India. So there's some private charitable hospitals, and then as a condition for receiving charitable status, they have to keep 10 to 20% of their beds available for people who can't afford to pay. And they sometimes get government subsidy to help cover those costs. So that was an interesting case as well. And then another one I thought really good for in the education sector. This is also in India, of somebody giving a bursary to a university specifically to fund girls studying engineering. So again, quite a nice degree of restriction there.
Sam, thanks for that. I mean, there's some really interesting examples that you gave us there and some really different situations that people are experiencing. And I think that's just the kind of thing that helps bring it to life. But what about donations of assets, you know, rather than money, something else that has been given, you know, use of an asset or an asset in kind? Have you got some examples of those as well?
Absolutely. And I think this is a particularly knotty area for people in our sector, isn't it? So I heard of a great example of a non-profit organization that provides affordable housing for poorer members of society. And they received a donation from a philanthropic fund specifically for the construction of housing development, a social purpose asset, if you like, which took nearly 2 years to build. So I thought that was a very interesting example with some good accounting issues in there. And then I came across an interesting example in East Africa of an NPO that was purchasing 2 identical vehicles for a malaria program. And one of the vehicles was funded by a donor that was quite relaxed in their approach. They needed to see that the organization had purchased the vehicle, but after that, they just trusted them to use it as needed. And then the second vehicle was funded by a bilateral donor that had quite a few rules about asset use. So first of all, the grant agreement said that the vehicle had to be used for this malaria program over the 3-year grant period. And then that at the end of the grant period, the vehicle would be returned to the donor. So that brought up some really interesting questions. So even though the logbooks were in the name of the organization, with respect to the second vehicle, was it substantively theirs? Did they own it, or were they just given the right to use it for that time, even though the vehicles are identical and for the same project? So that was quite an interesting one. Then another one I came across again recently, it's a non-profit enterprise in America that manufactures nutrition sachets for malnourished children, and they're then sold on to aid and relief agencies to use in emergency situations. So this NPO, they received a donation of highly discounted multi-year software license from a USA-based software company that provides, ERP and CRM solutions. And this NPO, they use it to manage all their accounting and budgeting, reporting, logistics, and database needs. So it really helps their work. They probably couldn't afford it if they had to pay full price, but they received that as a sort of donation in kind, asset in kind. And then the final example that has come from one of our advisory group members, I find particularly interesting, is a donation in kind to a non-profit museum in Japan. This lovely museum celebrates beauty and mental health and the environment with a stunning collection of shells and pebbles. And so these are donated by individuals. And of course, it's impossible to ascribe any kind of meaningful value because they are invaluable.
Yeah, really interesting. And you've covered a range of different types of assets that can be donated to NPOs, all with different challenges, I think, attached to them. So what about examples of volunteers and other types of services in kind? Have people shared examples of those with you as you've talked to people about the consultation paper?
Absolutely. And volunteerism is such a wonderful and central feature of this sector, isn't it? One example is from an organization in the Caribbean, enabling entrepreneurs to build sustainable livelihoods. And they have volunteers that include mentors who advise and encourage the young people. So that's a good example. There's an organization in Tanzania where community members contributed their muscle as unskilled labor on the construction site of a village health facility. And what the organization did there is they valued that time and they were able to have it considered as match funding from a donor who would only contribute a maximum of 80% of the project costs. So that was also an interesting example. I myself have a friend who volunteers as a trained grief counselor for an organization that supports people who've lost a child. And perhaps some of the people who are attending this webinar will have volunteered their time in community event organized by an environmental NPO to, I don't know, pick up litter or plant trees or something like that. So it's quite common. So then in terms of other types of services in kind, apart from volunteers, there's an organization that I know about that reintegrates children who've ended up in orphanages to go back and live with their families. Now, most of the head office staff work from home, but they needed office space just once a week for meetings. And one of their board members had this lovely riverfront office space, and he donated that space to them for free for those meetings. Of course, it was much nicer than they needed or what they could afford, but they were very happy to accept that, and they have used that. Then another example that comes to mind is a non-profit school that was building a new campus. And one of the parents had a connection to a tractor company, and they managed to get the donation of earth moving equipment for a month to help with that construction. I can imagine that many NPOs among our listeners here will know of organizations that have received pro bono professional services like accounting or legal services from generous firms.
Great, thank you, Sam. Some fantastic examples there.
So Karen, I did also want to share this clip from Jobra Mulumba, CPA from audit firm Saka & Co in Uganda. about his client who's using the deferral method for income conditions, for income recognition, but with conditions. So I'll show you this.
So we have a client which is an international NGO, but they were required to recruit and rehabilitate 200 girls in northern Uganda. So the revenue had to be apportioned against the number of girls who were being recruited and rehabilitated. So that apportionment is what we call targets being met against revenue recognition. But the dangers are in identifying the milestones against which such money should be recognized, and also where these targets are incomplete or the qualitative aspects relating to them. So I hope that this project will help us in solving all these problems. Thank you very much.
I hope that worked. And then I'd also like to recognize and acknowledge, let me see, 3 gentlemen who shared their stories and experiences with me, took their time and effort to record videos and have interviews. Erastus Omolo, FCA from Crow LLP in Kenya, Homia Madan from HFK Madan in India, and Dr. Muhammad Abdul Hay from Shafak organization in Turkey. And I really appreciate their time and efforts in sharing their experiences. Thanks.
So thank you very much for that, Sam, and that video. Obviously there we've been focusing on revenue, but I also want to pick up inventory as well. And I'm now going to play a short video from Phil McMinn-Mitchell, who is a member of our practitioner advisory group on issues related to inventory.
I've worked with charitable health centres as part of the National Health Response in Uganda, and for emergency relief organisations working in several countries for different donors. A practical challenge for both is how to present the value of donated inventory. As a primary healthcare clinic, our services include distributing free-to-client products, such as mosquito nets or subsidised treatments for patients with HIV. After the patient's well-being, our main admin concern is the physical control of the commodities, as well as knowing when to reorder and which source to report to with the information on patients reached. For the humanitarian organisation, donations in kind were needed to address lack of suitable items in the market. This was often because a natural disaster had disrupted supply chains, or demand exceeded stocks and prices rose. We therefore needed a valuation basis that is fair and easy to explain to staff and funders. As well as reporting to donors and to suppliers of the subsidised health products, we need to report to the local regulators or charity board, and so the value of stock at the period end needs a basis for reporting in financial terms. The fair value of donated items is a challenge, as sometimes even the entity providing the items might not have that information. The effect of bulk purchasing by the donor, for example the mosquito nets, means comparison to local retail pricing is unrealistic. Similarly, the current replacement cost of a bucket or plastic for shelter after a storm will be rising each day, which is why donations in kind are needed in the first place. When valuing donated inventory, both for the charitable health centre and the emergency response NPO, we need to consider what cost information is available from the supplier. With items that are provided free of charge to the client or at a subsidised cost, it would be helpful to have guidance for a valuation basis that is meaningful and consistent and can be described in our accounting policies.
That's great. And I'd like to extend my thanks to all of those who provided examples or participated in the videos, which I think have highlighted the different facets to the issues that non-profit organisations face.